And with that, we move on to our next session. And our next session of the day is a panel discussion on micro businesses, the pathway to recovery and growth through digitalization. Now, micro enterprises are vital to the growth of any and every economy, especially for a fast developing country like India. These micro enterprises are also major source of income for low income households and are essential and critical for the development of rural India. Now, micro enterprises was one of the worst affected sector, creating challenge for continued income for many low and middle income households across the country. As we are looking towards future and building a self-reliant economy, what could be the pathway of growth for micro businesses? In this session, our panelists will touch upon some of the most pertinent questions on the role of digitization, on how policymakers and private sector can support micro enterprises to be a part of this digital transformation and be future ready, on how it can be ensured that they are not left behind in the era of digitization. And joining us for this session are Mr. Prakash Sheshadri, founder and CEO at Sea Change Consulting. Prakash will also guide and moderate this session. Welcome to the discussion, Prakash. Our next panelist is Mr. Samir Vakil, CEO at GlobalLinker. We welcome you to this panel, Samir. Thank you for joining us. And joining them, we have Mr. Anil Kumar SG, founder at Samunnati. Welcome to the show, Anil. And completing the panel, we have with us Alison Eskesen, Vice President at Mastercard, Center for Inclusive Growth. Welcome to the discussion, Alison. And with that, I will hand over this session to our moderator, Mr. Prakash Sheshadri. Over to you, Prakash.
He shared certain pertinent inputs with which I would start and then pass on some questions on to the panelists here. He was sharing specific details which, when it comes to, he was speaking about India having 70 million MSMEs, which actually translates as 7 crore MSMEs. They contribute 30% official figures for the GDP of India. They contribute 48% directly and indirectly to the exports that happen out of India. And the best of all, out of the 120 plus crore population of India, 11 crore employment is generated by MSMEs. These are the positive sides. But when it comes to the growth of MSMEs, there seems to be a huge divide between the blue chip companies and the lower end of the society or the segment, which is what MSMEs are all about. And in fact, Mr. Nitin Gadkari in his talk was repeatedly mentioning the huge digital divide. If you take any of the top companies in India, whether it's in the IT sector, manufacturing or whatever, the amount of digital transformation they have done, the embracement that they have done into IIoT, Industrial Internet of Things, has been really humongous. But we do see that there is a pattern that is emerging where MSMEs growth into that segment is still not there. The gap is between 10 to 12 years is what they say they are behind. In this context, we have 3 excellent panelists which have been put together today. I'm going to first tap into the expertise of Ms. Alison, who happens to be with Mastercard Singapore, based out of Singapore. She does focus a lot on inclusive growth and philanthropic activities based out of Singapore. It's nice to have you here, Alison. I would like to start first with one question to you. We find that there is a huge digital divide, specifically in this part of the world. I don't know how the other ASEAN countries are faring on this. The gap between the large caps and mid caps and the micro and small industries on the digital footprint is really huge. How do you see that we can actually fast track to shorten the gap, and what is the road ahead that you see?
Thank you so much, Prakash, and thank you for having me here. So you're right. The Mastercard Center for Inclusive Growth is the philanthropic hub of the company. And so we deliberately sit between the business and the Mastercard Foundation, which is wholly philanthropic. And I bring this up because it is particularly relevant to your question of what's the role for the big corporations to play in helping to bring along and grow and accelerate the success of the micro and small businesses. And for us, we see that as part and parcel of our own success story, and have really, in India in particular, created a small business strategy that has 33 crores or sorry, not 33 crores, 250 crores or $33 million behind that strategy.
Wow.
And there, we're really focused on women's economic empowerment and unlocking their full potential. We are really interested in helping just small businesses in general to grow, as well as to look at improving the productivity and therefore the profitability of smallholder farmers. And I think that key to accelerating the success of micro and small businesses is really starting to reconceptualize what does partnership look like and how do you drive it at scale, because really there's so many millions of micro and small businesses, as you pointed out, that need support. And so working solely at small pilots isn't going to drive us to that transformative change that I think we all really want and need, particularly as we're coming out of the global pandemic. And small businesses, as you know, have been hit dramatically and disproportionately hard. And so we need to really increase and double down on our investment to really support them. And to give you one example of what Mastercard's doing in other regions that we're bringing to India as well as throughout Asia Pacific, is looking at how can we take the assets that our company has and really make them work for small businesses. So to give you an example, we have a global partnership with Unilever. And we started in Kenya where we said, okay, Unilever has sales data on these mom and pop shops, so Kiranas. And based on that sales data, if we bring one of our customers, banks or financial service providers together, can we help to find a way to recreate what a small mom and pop shop's cash flow looks like? And given that that data is coming from Unilever, which has incredible credibility in the market, is the bank willing to lend, and can we do that in a digital way to reduce the transaction costs associated with it, and therefore bring down the cost of credit? And in Kenya, it's worked remarkably well, where we've seen an increase in sales for small businesses of 10%, because now they're not beholden to, I can buy the inventory that I have cash for on that week, but rather I can plan ahead. I know a festival's coming. I need to buy more of X, Y, and Z in order to be prepared to respond to my customers. And that construct really leverages the assets that Mastercard has, everything from philanthropic investment to make certain that the training is put in place so that small business owners understand how to use credit productively and don't fall into a debt trap. It also leverages our products and our technology in that these are digital transactions, and it leverages our network in terms of bringing in our customers. And because it happens to be Unilever and Mastercard in this situation, it's amazing because we're two multinational corporations that are very like-minded. So we can create sort of plug-and-play models that enable us to start to replicate from one country to the next. And as soon as you start to do that, it's really a conversion of what business as usual starts to look like. And I think that is when you see this remarkable transformation where you are commercially profitable and successful as a company, but you are also deliberately and measured in your approach to creating social impact and helping micro and small businesses.
Wonderful, Alison. Really, I saw an eagle view, right, at the 35,000 feet view, macro view, as well as how an eagle would fix its eye on a prey at ground level. You were able to cover the full range. The important point that he gave in terms of leveraging of data and how we are going to help the organizations manage their cash flows, which is one of the biggest challenges for the small and micro sectors. And also the cost of credit today is still, that's a big issue. And of course, the technology gap. I mean, you gave a wonderful perspective of some of these points. Let me now jump to the next panelist that we have, Mr. SG Anil Kumar. He's the CEO and Managing Director of Samunnati Intermediary Financial Services based out of Chennai, India. He has a huge, he always calls himself a debit credit banker. He has a huge banking background with educational background spanning a couple of MBAs in India and abroad. The amount of work that he has done specifically in the agri sector, which is also something that feeds backwards and forwards the MSME sector, and specifically the cost of credit and all that you have been speaking, Alison had been speaking. That's where Mr. Anil steps in with his organization. Mr. Anil, would you like to expand on the same question a bit from your perspective?
So from Samunnati's perspective, we are in the value chain approach to finance. The moment you take the value chain proposition, you have the demand side of the value chain and you have the supply side of the value chain. The demand side of the value chain for us is represented by the enterprises which are in the business of moving goods and cash. Other than the producer who is a smallholder farmer in agriculture and the consumers who are usually you and me, there are host of entities predominantly in the movement of goods and cash. Now, the moment you bring in this movement of goods and cash, there is a buyer and a seller. Now, the way we are looking at the value chain proposition is when you have a buyer and a seller, the seller knows where to procure from, whom to sell to, what quality quantity, and the buyer leverages this native intelligence that the sellers have to be able to procure goods from specific pockets. However, from the finance perspective, from the debit credit perspective, if you see, the seller would want cash immediately, but the buyer would want to pay later. The moment you bring in this construct where the seller wants money immediately, which means he needs working capital, and the buyer would want to pay later, which means the buyer actually is looking at riding on the working capital of his suppliers, which is the sellers. How do you then make the value chains operate at a higher equilibrium? Because working capital indeed is a constraint for several of the enterprises, whether you are a buyer or a seller. But the moment you have one constituent looking at riding on the working capital of the other constituent, the value chains all settle down at a lower equilibrium because you can run as much as you have access to working capital. And that is where Samunnati steps in with a mandate or with a vision to make the value chains operate at a higher equilibrium by removing this working capital constraint. In order to pursue this objective of removing the working capital constraint, the way we look at underwriting the buyers and sellers is completely different from the way a formal financial institution looks at. And those are some of the insights that I would want to share for the larger benefit of the audience. The traditional ways of credit assessment are usually around the financial statements. You have tax returns, you have bank statements, you have transaction history for last 3 years, so on and so forth, which are all surrogates to say whether the cash in and out and the business is generating enough liquidity to be able to honor the commitment. But the moment you bring in this movement of goods and cash, you are basically underwriting the transaction. When you are underwriting a transaction, what is important to underwrite as a risk is whether the goods have moved from seller to the buyer and whether the propensity of the cash moving from buyer to seller is established. Once these two are established is when you know you are underwriting a transaction, and in order to do that, you don't need to look at last 3 years balance sheet and last 3 years financial statements. That they are not relevant. And who are these buyers and sellers? More often than not, you actually see buyers and sellers to be people who are working together for a long time. And in the context of agriculture, closer to the producer, longer is this association. And we refer to these, familiarity of working together under two dimensions. One is soft information that we call the social capital. The second one is this social capital is getting created on account of not living together, not knowing each other, not being neighbors, but in the context of buying and selling a specific commodity. So there is a transaction history associated with this familiarity, which we refer to as trade capital. From a banker's perspective, if you see, social capital is whom to lend and trade capital is how much to lend. If I am in the business of, say, animal feed, here is a supplier to me supplying 10 tons of maize every quarter for the last 15 years. 10 tons being the transaction history and last 15 years being familiarity, the social capital. Whom to lend, how much to lend. That is how the underwriting can happen. The moment that kind of underwriting comes into picture, then you can customize the credit requirement as well, because maize could be 45 days, fruits and vegetables could be 7 days. Each commodity has a life cycle of when the working capital moves between buyers and sellers. Those are the dimensions which we feel will remove the working capital constraint that exists thereby making the value chains operate at a higher equilibrium. Removing that will move the value chains operate at a higher equilibrium.
May I have a supplementary question, because I see that you are more looking from the current position of the buyer and lender and helping them out and getting the credit passing through the line so that the short-term business issues are taken care. Would you mind sharing your experiences, specifically how you have digitally enabled to make them more savvy on the market and help them actually use all that you give and bring forward digitalization as well?
Right. So in markets where there is a confluence of soft information and verifiable, tangible information, you need to bring in triangulation of how do you understand this social capital, trade capital. In other words, how do you monetize the transaction history that exists? Because most of these micro enterprises do not have all the records that are required for a traditional way of credit assessment. And that's where we bring in three dimensions. Dimension number one is whatever is captured as digital footprint in terms of the transaction history is one cohort that we have. Second, there is also a transaction history associated with non-financial dealings, which is a stock movement, 10 quintals here, 10 quintals there. That is what is the basis for the financial transaction history. And third one is the informal ways in which the records are kept, more importantly at the lower end of the value chain. So triangulating these three information sets or cohorts is what bridges what we call the information asymmetry. We, having worked in these excluded markets for more than 15 years, we are of the opinion that the information asymmetry does not exist when somebody says there is no information. It's just that the information exists. We don't have the ability to assess and make a better use of that information. Information exists, not in the format that we are looking at. So the way we look at is triangulate these three and then structure the working capital proposition. And our working capital structures range from 1 day to up to 100, 120 days. And quantum ranges from less than $100 to $1.5 million, depending on what the transaction is. The last point I would like to make is all this get accentuated the moment you bring in agriculture, because agriculture has seasonality and cyclicality. All of them harvest maize at the same time in a particular geography. All of them harvest paddy at the same time in a particular geography. So the working capital requirements usually are peaks. You don't have the requirement that is linear over a period of 12 months. So responding to that peak is also an important dimension in triangulating this information. Yes, Mr. Prakash.
Thank you, Mr. I know you have done a lot of work in your organization in developing platform for them. I'll come to that in second round. Let me move on to Mr. Sameer. Sameer, again, like Ms. Alison, also has a huge background from finance, credit, and the entire value chain for almost 2.5 decades. And the work that he has been doing the last 5 years is exemplary. He has developed a complete platform to link SMEs and MSMEs globally. And he has already brought in more than 300,000 people on this platform to allow them to network and seek help mutually. And I'm very sure that Mr. Sameer, you would have deep insights into this question that we're already deliberating on this panel. How would the industry per se help in the micro and small industries to reduce the digital gap that seems to exist now?
No, I think that's pretty much the need of the day. It was always required, and we used to always say that organizations that are digitally enabled, and I'm referring here to MSMEs as well, would probably be able to grow faster than others, and those that did not would probably experience slower growth. I think that statement has undergone change in the last 6, 8, 10 months, really. With COVID happening, I think it's almost become a question of survival for most people, and growth, of course, will be the bonus on top. So I think given that that's the need of the day, and given GlobalLinker started in 2015, and you're right that it has 300,000 SMEs from over 150 countries, the concentrations being in India, Thailand, and Philippines, where we currently operate local versions, and we are going to be expanding to many more geographies. Our experience has been that whenever you're trying to achieve digitization on a very mass scale, which is clearly the need of the hour, you need three main ingredients. One is a platform or an ecosystem that's able to onboard SMEs and digitize them, handhold them in their digitization journey. And that has to be extremely simple. I think the complexity can be kept behind the curtains. As far as the SME is concerned, it needs to be very much business as usual, and in very simple steps, their business needs to be digitized even to their own surprise. So that's one part. The second is you need evangelist organizations who have very, very high reach and large reach and footprint in terms of dealings with MSMEs to be able to provide that ecosystem benefit or solution to these large numbers of MSMEs. And the third you really require is programs, which are specific programs addressing either homogeneous clusters or even individual SMEs for that matter, but invariably they become homogeneous clusters that you are creating programs around. So I'm just going to deliberate and go into a bit of each of these. So if you looked at the GlobalLinker platform as an example, and there are many others, so I'm just taking it more for the purpose of illustration. We do two things in digitizing SMEs. One is to create a digital presence for the SMEs so that they may be discovered almost anywhere in the world, which is where our matchmaking comes in. So what Facebook did for us in a social context, what LinkedIn was able to do for us as professionals, we are trying to do for MSMEs in the business context, and therefore it's a business networking solution using a digitized business card which uses algorithms at the back for matchmaking. So that's one aspect of the digitization. The second is digitizing their inventory, which is through the ability for them to create a digital catalog, a digital e-commerce store, an e-commerce supply chain solution, as well as participation in digitized malls or marketplaces as required. So with those two components, with the help of several other partners, we are able to meet the requirements of MSMEs in their digitization, whether it is for their revenue growth, it is for reduction of expenses, it is for more efficient operation of their business, or it is for expanding to newer geographies or newer sectors that they would have not been able to do on their own. In terms of evangelists, we've got a number of organizations we are partnered with who offer a co-branded version of GlobalLinker, and therefore we are able to reach more MSMEs in a larger scale. Just to mention a couple, ICICI Bank, HSBC, you've got Mastercard, we've got government bodies like the government of Telangana, the Federation of Indian Exports Organizations, and several trade bodies. These are organizations that are inviting their MSMEs to get digitized through the GlobalLinker platform and therefore building scale. And that's how the 300,000 SMEs have come in a very short time. Then coming to the programs, now you need specific programs to be able to deliver value to MSMEs in large clusters. And I'll take two very quick examples for that. I think in the state of Odisha, working with the UNCDF organization and a couple of other partners, we are digitizing 600,000 self-help groups, women self-help groups under Mission Shakti, which is the program of the state government of Odisha. And this represents 7 million women. So it's 70 lakh women owning 600,000 or 6 lakh enterprises. And we are digitizing them at the core by creating their supply chain, their front-end e-commerce store, and a combined marketplace from where they are able to offer their products to the world, in a more efficient way. And the objective over there is to improve their working capital so that they can have realizations much faster and they can have higher realizations because you're being able to explore the market price and market opportunity. A second initiative was run by the Government of India in the Ministry of Industry and Commerce. When the pandemic hit us, a lot of the grocer stores, the Kirana stores that Alison talked about around the country, were unable to manage their operations because of severe movement restrictions. And on the other side, consumers were seeking essential commodities, very badly. And given the movement restrictions for them, they were unable to go out to these stores. So in a very short span of time, in fact, in something like 4 weeks, we had over 8,000 mom and pop grocery stores in a couple of pointed states that we had in Uttar Pradesh and other places where we were able to digitize them literally overnight. And we created a solution for them where they could create a digital e-commerce store in under 10 minutes. So any grocer on their cell phone without any technical knowledge in under 10 minutes was able to create their e-commerce stores. What we saw over there, Prakash, worth highlighting was that that's the one time where we actually saw group trainings happening. So up to even 500 grocers would come on a call, and we would do this on a VC and be able to train them in their local language so that they were not only digitized but also knew how to operate it. And then, of course, there was a fair amount of handholding that was provided. But surprisingly, all of them were able to digitize their stores without any difficulty. And that comes back to the point I was saying that to make digitization successful on scale, the complexity has to be left behind the curtain. It has to be a simple couple of keystrokes as far as the MSME is concerned. And that can position them extremely well for the future. And like I said earlier on, also in today's day, it's not only for efficiency, it's also for survival, because you're able to address a much larger segment of people, especially given preference of lesser movement in the future. That will become very important. So handing that back to you.
Yeah, that's as good as putting an entire ocean in a simple glass. You're given the complete strategic to execution map. Part of our work in Sea Change, we also in the last 15-20 years focused a lot on MSMEs and covered thousands and thousands, specifically in the urban and semi-urban rural areas. Yeah. One thing specifically in this pandemic, for round 2, I'm setting the pace. Whenever we meet MSMEs, the first challenge we find is that it's a completely single person focused organization. Whether they're doing 5 crores or 50 crores or 500 crores, you find that there's only one person who sits at the top. And this person literally is the entrepreneur, the salesman, marketing person, R&D person, production head, quality man, finance man, admin man, and also he has to take care of IT. Even today, when we speak about digital, they still don't speak digital, they speak IT. They just still don't understand. One of the biggest challenges which you seem to have found a solution, Mr. Samir, is infra is a very big gap that even government has identified, which would enable digitalization in a faster and smoother way. Second is the cost behind this today is prohibitively high, whether you really want to move. And this is where some kind of an aggregation model like what you had said might help. So my question to the second round panelists, I would start with Mr. Anil. Is it a government issue? Is it an ecosystem issue? Is it a mindset issue of the MSMEs? How do we crack this to hit numbers? We are talking about 70 million MSMEs in India alone. And the data says that less than 1.5% to 2% are actually having some kind of a digital or IT footprint. And this would have a huge impact. Mr. Anil, your views on this?
So, this issue being so enormous, complex, and important, there is no one segment that needs to take the responsibility or lead to make it happen. I would say it is a responsibility of everyone. The moment we say it is responsibility of everyone, aligning the incentives become extremely important. You see, from the technology perspective, wherever there has been a tangible association of real dollars accruing to a income at a household level, the adoption of the technology is instantaneous and people find a way to adopt. The moment it is not accruing, the few dollars household income, then, it becomes more a top-down strategy rather than a, ground-up strategy, I feel for the MSME segment, given our work in the, in the agri-enterprises dimension, there are a host of tools that are emerging to make this happen, and each of them are moving at their own pace. One of them is a simple WhatsApp business account, right? A WhatsApp business account can bring in so much of micro economic information, because in the market context, every 15-20 kilometers you have a different price discovery. Forget about every geoclimatic zone, which is completely different. Every micro community needs to have the information that is relevant for the local geography, right? 2, we also are seeing emergence of national platforms, and I would like to take 2 examples on that specific to agriculture, because that's a huge segment. One platform is the ENAM and electronic national agri markets and the electronic negotiable warehouse receipt. One is post harvest, second one is a virtual mandi where you would be able to buy and sell. Significant traction during the COVID times, and I would agree completely with Samir when he mentioned about how the adoption rates have gone up significantly during the COVID times. But coming back, the other platform that is specific and more relevant for the MSMEs in order to address their working capital constraint is the TREDS platform. This is a platform of Reserve Bank of India, and there is a dimension of the policy level and government playing a role, in which it is mandated that any large buyer more than 500 crores of turnover has to be necessarily on this platform to be able to buy. From the smaller suppliers, It includes everything. It includes manufacturing, it includes agriculture, any MSME for that matter. And on the supply side, a host of MSMEs, and with the MSME definition now having been modified and made much more relevant and simplified, there will, in my view, more MSMEs that can take the benefit. On the regulator side, on the RBI side, the platform has specific dimensions. You have to be, this kind of an entity to be able to be on the platform. Then, the payment has to happen necessarily in 45 days, so on and so forth. So the trends, in my view, would be another dimension where the MSMEs can leverage the ability to remove the working capital constraint and be on the platform. Another, digital intervention. At a market level, the third dimension, at a market level, we also are seeing a lot of FinTech companies coming in with the ability to harness information from multiple sources and be able to give a meaningful proposition to lenders like ourselves. We have some wonderful invoice discounting platforms that are coming in. We also are getting few FinTech propositions or technology propositions of harnessing the social data, harnessing the digital footprint outside the banking, debit credit dimension, and giving the lender a view on whether this person is credit worthy or not, to be able to lend. So we have moved away from a traditional way of assessing the business to using digital tools to be able to assess whether the person has the ability or intention. We usually look at, having been a banker for 29 years, the default happens on account of three dimensions. One is a circumstantial default, a situational default, and third one is a willful default. Circumstantial and situational are where there is an intention to pay but not having the ability to pay, and 99.99% is because of a wrong product designed by the lender. And that on account of not having sufficient digitization to be able to give the right product. But when it comes to the willful default, then you have a wrong guy. When you have a wrong customer, you have a wrong customer. You can't do anything about it. But what we are seeing is how do we capture those dimensions using psychometric tools and the digital footprint outside the finance domain to make recommendation whether that is relevant or not to lend to the entity.
Yeah. Since we are running short of time, we have two more panelists to go. In the recent conversation, the minister was sharing very interesting data. Maybe Alison would be able to connect to that. The government wanted to give about 3 lakh crores of Indian rupees to the SME segment, and less than 1/3 has been taken. And the government found that the Udaan platform, where the MSMEs are supposed to register, which is a 10-minute process, which will enable them to get all the benefits. Less than 15% people in India have registered. I mean, it's there, you just have to register and take. So coming back to this ecosystem of enabling MSMEs to seamlessly adopt and grow into digital, what are your final round of recommendation, Alison?
Well, thank you so much. I think that similar to, or underlying what Samir and Anil have both talked about are two really important points. One is that the need to become digitally included is now a competitiveness issue, that if you want to remain competitive in the world that's evolving, in part accelerated because of COVID, but was certainly on that pathway before, you do need to think about digital inclusion. I was at an APEC meeting earlier, and the IMF was correlating digital inclusion with increase in GDP growth, right? That the more digitally included you are, the faster you saw GDP growth, particularly coming out of COVID. So there's a macro reason for why you'd want to think about this in terms of building the ecosystem. But then something that Anil said around that when forced or when incentives align, you find that you don't need to push as hard to get small businesses to decide they want to digitally adopt. And so the question around how do you build out an ecosystem that is scalable, that sustains that change, it really is about how do you align those incentives and what does that look like. For us, we're working with a number of different partners to provide on-the-ground support on a one-on-one basis, but we're also looking at digital tools so that you can really lift the bar for the masses, because we find that that's critically important. Because if we continue to think about sort of old practices practices of one-on-one advisory services, it's going to take us a very long time to get the type of scale that we need, and quite frankly, the type of scale that's imperative given the way the world's evolving. And so we have two partnerships. One that I'll talk about is with Mandeshi, who really works with rural women entrepreneurs. And it's amazing the stories that they share, that over the last 8 months, how quickly women have pivoted to say, digital's not for me too. I need to be scrappy. I need to figure out how to make my business work in times when other market opportunities have been closed off for me. How do I fix my supply chain or access my suppliers when that historical supply chain has closed down because of physical movement restrictions? And so I think that the aligning of incentives is critically important, and the ensuring that there's sufficient amount of training and hand-holding and capacity building, whether it's face-to-face or whether it's virtual or through digital means, is vital in order to really flip the whole ecosystem.
Thank you, Alison. That's a wonderful paradigm shift that you introduce. One-to-one is passe and one-to-many is the way to go to help people to digitize. Mr. Sami, the last round here for you before we go to one final round. You have done extensive work. Specifically, when I heard that statement that you made, in less than 10 minutes through a couple of click-throughs, you enable people to get on digital and do the business. What is your take on the ecosystem partnership? How do we enable MSF? Is it their issue? Is it a government issue? What is your take?
And just to set the context for that response, or the question rather, I wanted to first and foremost say something that we believe very strongly in. While we refer to them as small and medium enterprises, and we are one of them today, the dreams of small and medium enterprises are never small or medium. They're always large. Now, if you want them to realize their large business dreams, there are a couple of things that need to be done. And I think to your question, two things that I can think of immediately. Number one, this is the debate between providing them the fish or providing them the fishing rod. And I'm clearly in favor of the fishing rod, so I'll talk about that. And the second is, I think, what we've always known as PPP, the public-private partnership, I think needs to get one more element included in that, and that needs to become PPSP, really, and the S being the startup. So if you have a public, private, and then a startup joining that, that partnership would be formidable, because you have the agility of a startup, you have the agility of a younger organization that's probably a new generation organization, and therefore intrinsically digitalized, increasingly thinking digital. I think that adds tremendous value and power to this solution. So let me just talk about the fish versus the fishing rod. Now, you can either provide access to customers to an SME, or you help them digitize at the core so that they can find customers. Now, taking just two very quick examples, we've got a sports store in Mumbai by the name of Total Sports that was digitized by GlobalLinker. And this organization has since then innovated in many, many different ways, because they know the power of having been digitized at the core. A second store is Mahavir Home Store, which is in a suburban station of Mumbai, that went on from being a home store into now looking at home organizing, because they feel that's a better way to be moving forward, and they're able to do that once again on the back of digitization. So I think the entrepreneurial spirit to want to grow their business, to be able to succeed, is already there. What is missing is their ability to see how they may be able to do that. And once you digitize them to the core, they're able to take businesses to completely different levels because of their underlying capabilities that have been lent to them. Which brings me to the PPPS part that I talked about earlier. Now, if you have government, and I want to talk about a couple of very, very quick names, like whether it's the government of Telangana, who we are working very closely with at GlobalLinker. I mentioned earlier about the government of Odisha, for example, or the Federation of Indian Exports Organization under the Ministry of Industry and Commerce, doing stellar job when it comes to helping exporters digitize in the case of FIO. In the case of Telangana, it's all SMEs that they are looking at, trying to digitize them rapidly. So that is one part. But then when you bring in private partnerships along with that, the number of private organizations I talked about, whether it was, Mastercard, ICICI Bank, HSBC, all of these organizations coming together and trying to do that for their customers, it just becomes a very strong thing. And what you then need is the platform or the ecosystem that startups are able to bring today in a very, very agile manner. And that's really what why our combination of this model, and including with trade bodies, has worked exceedingly well in this area. So those are a couple of my points to say. provide them a fishing rod, give them an environment, and create a broader partnership so that we can build on scale much faster and more successfully.
Okay, we have another 3 minutes to go. Let me take a magic wand. Assuming this magic wand is given to each and every one of you, if there are 3 things that you could get done to cut the digital divide and really make them on par internationally, 3 things that your magic wand would do for them. Your turn. Whoever wants to go first can go.
So if I can take a stab at that, I think, and what we've already envisaged, so I hope that comes sooner rather than taking the time it might, is to create one digital community of SMEs in one single place. So this is a digitized community of connected SMEs, so that they may get collective efficiencies and collective economies of scale. That's my dream, and that's what we are working towards, anyways.
Thank you, Mr. Samir. Dream grand. Your magic wand round.
So for me, the 2 things that I would highlight as critical, and I would use my magic wand for, are 1, really seeing the gender divide close. So really seeing women's economic empowerment, particularly in South Asia, where that divide remains stubbornly wide, really unlock the full potential of women entrepreneurs, because you have half the population that are incredibly smart and motivated and committed to helping their families succeed, and to see that leapfrogging into the digital economy could be incredibly valuable. So that's one. And then the other one, which we haven't talked about here, but I think is a pillar of the successful digital economy and a pillar for scaled digital conclusion, is cybersecurity, and making certain that from a small business's perspective, that they understand how to protect themselves and to be on that front line of protecting their business assets and their IP.
Thank you. You are round, Mr. Anil. 3 magic wand.
Yeah. Since you said magic wand, I would aspire that GlobalLinker does the digitization of all the MSMEs in the world, and Mastercard provides them the digital platform, and Samunnati brings in the working capital capability.
That's a beautiful link to end the show. We just have a minute to go. That's a beautiful summary. There have been lovely takeaways personally for me. I'm very sure that all the people who have been watching this show, specifically from the micro, small, medium enterprises, would have got tremendous amount of insights. And of course, anything that you can learn how much ever about swimming from books, but till you jump into the water and swim, you're not going to learn how to swim. I'm very sure the insight given by Ms. Alison, Mr. Samir, and Mr. Anil would have been tremendously useful to you. Thanks for this wonderful opportunity. This is Prakash signing off. Back to the stage.
Thank you.
Thank you very much, Prakash, and a huge thank you to all of our panelists for this wonderful conversation.